Hi there, good afternoon. You're watching the Mutual Fund Corner. I'm Manglam Malu. With me is Sumaira Abidi in the Mutual Fund Corner. Like every Tuesday and Thursday, we answer all your mutual fund related queries. Meanwhile, for the markets, it's been a relatively quiet Thursday given the sort of rally that we've seen over the last few trading sessions. So the Nifty has been in a tight range around yesterday's close and has been hovering around that with a 20-point uptick or downtake on either side of the middle line as far as yesterday's close is concerned. Currently sitting with a cut of about 7 points. Will be very interesting to see how the next couple of hours pan out for the Nifty given it is weekly options expiry. A whole lot of smart money is concentrating its bet towards the 11,350 mark. The closer it is to the 11,350 mark is where all the bets are as far as the smart money is concerned. If you take a look, case in point, the 11,350 put, which has a premium of close to around 14 rupees. The 11,350 call should come up for you. That one too is in focus, has a premium of close to around 8 rupees as we speak. And put these together, you have a combined premium of 20 rupees. In the morning itself, this combined premium was close to around 40 odd rupees. So that's telling you the smart money is looking to eat the premium on the 11,350 straddle. So we'll keep an eye out on how this pans out, given that currently there is a fair amount of open interest on both the 11,350 call and put, combined premium of close to around 20 rupees. The street believes maybe the range could be getting narrower from 11,300 and 11,400 to now 11,330 to 11,370. Let's see how that goes about the next couple of hours. Very, very important for our markets. The mid-cap index, after underperforming for the last couple of trading sessions, have now picked up from the lows and currently trading around the higher end of today's trading range. First up, all the top stories that we're checking, and then we hand it over to Sumaira. Bulls lose steam as the key indices trade flat, but off the lows of the day, the Nifty Bank outperforms after hitting 29,000 for the first time ever, led by Yes Bank and IndusInd Bank. Lupin gains, even though the company's Mandideep facility in Madhya Pradesh comes under the US FDA scanner. Tata Motors sulks after the Jaguar Land Rover business recalls 44,000 cars due to excessive carbon dioxide emissions. In an aim to boost liquidity, the Reserve Bank will swap $5 billion worth with banks for a period of 3 years. Bond yields move higher on fears that the Reserve Bank will purchase fewer bonds. As the discontent over unpaid MGNREGA dues grows, Karnataka Rural Development Minister Krishna Bairagowda accuses the central government of violating the law by defaulting on the MNREGA payments. Also holds the centre guilty for not reimbursing eligible farmers for the first instalment of the PM Kisan scheme. With that, we hand it over to Sumaira, who has a guest with her. Sumaira.
All right, Mangalam, thanks very much for that. Joining me this afternoon, I have Gaurav Rastogi, the founder and CEO of Kuvera.in, who joins in to answer all the queries that are coming in. Hi, Gaurav. Good to see you in. And let's get to it right away. I believe the first caller is through to us. Sudhavna Prakash is on the line with us from Karnataka. Hi, Sudhavna. Good afternoon. How can we help you?
Hi, good afternoon. My name is Sudhavna Prakash and I'm calling from Bangalore. I'm 25 years old. And I've been investing in mutual funds for the past 3 years now. I've been investing in Axis Long-Term Tax Saver and Reliance Tax Saver Fund and Franklin Templeton Tax Saver. These three are tax savers. I'm investing 4,000 each in all three of them.
Okay.
And I've been investing in Franklin India Blue Chip and Franklin India Smaller Companies Fund, rupees 1,000 each, and Reliance Low Duration Fund. And ICICI Prudential Value Discovery Fund. My aim is wealth creation. I wanted to check if I've chosen the right mutual funds.
Okay. How much wealth are you looking to sort of create, and by when?
I have a long-term view of at least 20 to 25 years from now.
Okay, that's very good.
I've started early, so I would, I have a estimation of at least 25 to 30 crores by end of 20 or 25 years later.
Okay, and that's, of course, with the assumption that you're going to scale up your investments, I hope. But, okay, so Davna, very good that you've started off early. So that's, at least one big take that you've gotten. The other good thing, Gaurav, that I can see is that he's using SIP method for ELSs, unlike this one big lump sum in Jan-Feb. So that's another tick mark. Does he need so many schemes? Can he consolidate the ELSs portfolio? And how does the rest of it look?
So, I mean, first thing is, at 25 years, you've already been investing for 3 years. So I think that itself is, you're doing things right.
Yeah.
So first thing is, just take a deep breath, because a lot of times people try and overanalyze things.
Yeah.
Your portfolio is mostly fine. It's about 11% debt, which is okay for your age. As you said about the ELSS funds, we think 3 ELSS funds are one too many.
Yeah.
Ideally, you would want to have 1 fund per subcategory. Keeps your portfolio clean, makes it easier to manage and rebalance over time.
Yeah.
So that's the one thing we would say. The other thing is, it seems like all the plans are regular plans. So one other thing you could think of is to move to direct plans.
Direct, yeah. Okay, so between these 3 ELSS schemes, what should he keep?
So fund specific, it's very hard. See, all 3 of them individually are very good schemes. What happens is, when you have 3 funds from the same subcategory, there's a lot of overlap between those schemes.
I understand that, yeah.
So any one of them, they're all good fund houses, they have good track records, probably the reason why they are in there.
Yeah.
But 3 of them together are not adding anything to the portfolio.
Okay, and the other schemes he can continue investing in and then look to scale up later on, right?
Oh yeah, I mean, everything else in the portfolio, it's actually really nice for his age. He has a small cap bias, already has a debt allocation, so yeah.
All right, so Dhanwa, so it looks like you're on the right track. You need to consolidate your ELSS portfolio, pick any one, needn't redeem the rest, just let them be for now. And the rest of it looks good, but look to scale up your SIP amounts as, of course, you see, and, incremental increase in your salaries. All right, up
and
next.
I had one more question, if I can.
Go ahead.
Okay, I would also like to plan my retirement funds. Would there be any suggestions on it?
Okay, so you're only 25, right? But admirable that you're looking that far ahead. So you'd have, another 35 years to go?
Yeah, correct.
Okay, and how much money would you need for your retirement?
I would need about 4 to 5 crores.
4 to 5 crores, which is in addition to the 25 crores that you need at the end of 20 years.
Correct.
Okay. All right. So Gaurav, for somebody who's looking at retirement this early, would you advise a very aggressive portfolio, at least for the first 10, 15, 20 years?
So, I mean, the way we think about it is, so you just think of it having 2 goals. You don't necessarily need separate funds for separate goals. So we believe very strongly in what is called the unified goal planning.
Yeah.
So you look at all your goals.
Don't be very linear.
Yeah, so don't be very linear, and don't say that these 4 funds are for this goal and these 4 funds are for this goal. It usually ends up making things more complicated, because you end up having 16, 17 funds for say 3 or 4 goals. For example, you're 25 right now, but over time you will get married, you will have kids, and those goals will also start getting added.
Sort of merge, yeah.
So every time you add a goal, if you add 4 or 5 more schemes, it becomes harder. So I think, like Sumaira rightly said, your portfolio looks really good. The tax saver is the one place where you want to probably consolidate and scale up over time. So do a step-up SIP. Just make a rule that every year I'm going to invest 10% more or 15% more, and that itself will help you achieve all your milestones.
Okay, so Dhanwa, does that work for you? Just keep increasing the amount that you're investing at the moment, and call us in 10 years if we're still around.
Okay. Thank you so much for entertaining me. Thank you.
Okay, thanks, Dhanwa. All the very best to you. Up next, we have Pavan MR, who's on the line with us, also from Karnataka. Well, Pavan, hi, good afternoon. How can we help you?
Hi, I am Dr. Pavan. I am 41-year-old. I am doctor by profession from Bangalore.
Okay.
I have 2 kids, and I am planning a retirement of corpus of around 1.5 crores and around 1 crore for both the kids' education.
Okay.
Presently, I am investing 5,000 rupees each in UTI Mid-Cap Fund, ICICI Prudential Value Discovery Fund, and Franklin India Prima Plus. The name's changed now. Franklin India High Growth Companies Fund, SBI Magnum Tax Gain, Murray Asset Emerging Blue Chip, and DSP Microcap Fund. As well as I also have a ULIP called as ICICI Pro Elite Fund, for which I pay SIP of around 20,000 per month. I was not happy with the progress of ICICI Prudential Value Discovery as well as the DSP Microcap Fund. So I was just thinking whether I should switch over or continue with the same.
Okay, Pavan, I'm going to hand it to Gaurav, but before that, one disclaimer is, of course, that, mutual funds, they're a product of the market, right? And therefore, the returns are dependent on market conditions as well. I would suggest that don't use this short time frame to judge their underperformance and rather let it play out over a longer period. But Gaurav, for the funds themselves,
right.
Is this allocation correct? Are the funds okay?
In terms of the goals, it seems like you're investing the right amount. So I think 1.5 crores in 19 years in our goal planner, it's about a SIP of 20K. Then you have 2 goals for your kids' education. So you're investing about 35,000 per month in SIP and 20,000 rupees in the ULIP. So I think investment amount-wise, you're doing well. You should continue to do so. And if you can invest more, always do that. The portfolio is, you're 41 years old, and the portfolio is 100% equity. To dampen some of this volatility, I think a 10 to 15% debt allocation will help. Will make it easier to ride these bad times, kind of what happened in the past 6 to 7 months. And that will also make it easier for you to stay invested. The other thing is you have 3 mid-cap focused funds, and there's 1 fund which is invest in both large and mid-cap. So again, there's a lot of portfolio overlap here. I think all 4 of them, by the way, are good funds. You can choose 1 large cap fund. You can look at a Nifty index fund as well because they have very low expense ratios. And between your 3 mid cap funds, you can choose 1 mid cap fund to continue with. It's easier to track. It's easier to monitor. Asset allocation becomes easier when you have fewer funds. So that's what we'll say. The last thing is about ULIP. Our advice always is to keep insurance and investments separate.
Absolutely.
So, buy a term life insurance.
In fact, that's the question I had for Pawan as well. Pawan, sure. This ULIP, are you using it, as your only insurance? Do you have a term plan? Do you have sufficient risk cover?
I don't have a term plan. No, I don't have a term plan.
Okay, so in that case, you might want to heed Gaurav's advice, which is to get a term plan and keep insurance and investment completely separate. I mean, that's something that I would also tend to agree with.
Sure.
Anything you want to add?
No, I mean, that's pretty much it. Investment amount-wise, you're doing well. So, the most important thing is, I think what Sumaira said earlier as well, markets will do what markets do, right? Yeah. But you have to stay on because they're not going to be up every year. They never have, they never will. So.
And our next query comes in from AP Singh, who's on the line with us from Pune. Hi, Mr. Singh. Good afternoon, sir. How can we help you?
Good afternoon, ma'am. I've shared my portfolio of mutual funds with you.
That's right.
In which you would have noticed that there are around 6 funds which are primarily large cap.
Yes.
And there are 2 of them which are, ELSS type. And there is one which is meant for my son, which is basically a children's plan. And the objective of having this kind of a portfolio was, firstly, as far as the first 6 are concerned, was to, have a rate of returns which would probably be higher than the rate of inflation and have a decent saving. As far as the balance 2 are concerned, the ELSS types, the aim was to save on taxes. And the last one was primarily to, save for the education of my son, who's right now 9 years old. And there's still some time before, he gets into the higher education group. So I just wanted to know whether this portfolio is as per my desired objectives or not.
Okay. So first things first, at least I think that there are just too many funds in your portfolio and it could easily be consolidated. I'm also not a big fan of children's plans, but you're the expert.
So children's plan, funds which are kind of built for a particular objective, there's a bit of marketing that happens there, and by tying it to kind of events which are close to our heart, they can kind of get a bit more value from the investor. So we agree. We usually do not recommend any of these specialist plans. The fund you've been investing 1K for the past, I think, already 9 years. I think you started 2009 in that fund. So, I mean, the performance is okay. It's a fund you can continue with, or you can also think for a large cap fund or a multi-cap fund, for that example, for that particular goal. A multi-cap fund will also do well. So those are the 2 things I would say. The first thing definitely goes into picture. You have too many large cap funds. You should think of consolidating everything under, say, maybe an index fund. Look at a Nifty Next 50 or a Nifty 50 index fund with very low expense ratios. And that could be one way to kind of making your portfolio more tractable for yourself.
Okay, Mr. Singh, I have a query for you as well. You're due to retire in 6 to 9 months. Is your retirement plan?
No. 6 to 9 years. Yes.
Oh, 6 to 9. Yes, sorry, it was a slip of tongue. You've started investing for that as well simultaneously. I mean, I'm just trying to understand if the query that you sent us is complete, or are there any more investments also?
No. In addition to this, I just have a small holding of stocks, and that's about it.
Okay, Gaurav, anything you want to tell him about, I mean, considering the retirement is just 6 to 9 years away, he has a younger son. Anything that he needs to do, maybe step up the amount or, slowly start moving to debt? I mean, how does he do it?
So it's a couple of things, right? So we didn't have all the information. So, for example, for your son's education goal, you've been investing 1,000 per month for the past 9 years, and then you're planning to do that for about 8 more years, I would assume, when your son turns 17. So that would lead to a corpus of about, I think, 6 lakhs or so. Is that enough? So if you think that's an enough corpus, then it's fine. Otherwise, you need to step that up. You're also investing in the large cap folio, which the objective is to beat inflation, but it can easily be seen as a retirement corpus.
Yeah.
So I think it's good to attribute where different parts of your portfolios are going to end up. So if you think that money is going to retirement, it's good to actually kind of earmark it for retirement, so that you don't spend it on a second house or a car or something else. But other than that, I think the stated purpose, if it is to beat inflation and if it is to have a corpus for your son's education, then that's fine. It might help to kind of just sharpen some of those definitions.
Okay, Mr. Singh, I hope that worked for you. Any more questions?
Thank you so much.
Okay, thanks a lot. And do remember that closer to your goals, you might want to start moving to debt so as to protect, the capital that you've already made till then. All right. Up next, Karan Bateja is on the line with us from Punjab. Hi, Karan. Good afternoon. What's your query?
Hello, ma'am. Good afternoon. I think I have dropped the queries in my mail. Can you able to see it?
Yes, I have got your query, but for the benefit of the larger audience that's watching it well and may identify with your question, do you want to take us through it again?
See, madam, as per my goals, I have started this mutual funds last year only, but I have been investing in APY like Atal Pension Yojana and some of the LIC policies. So my current requirement for you is to look after all those portfolio in mutual fund, whether that is okay. And now with the LIC, 3 years are over. So should I stop investing in LIC, which is a kind of lock-in period for LIC, and invest more in mutual funds in that portfolio, or should I need to change the portfolio?
Okay, Karan, so first things first, and I hope you don't take it badly, but insurance is not an investment. So look at insurance purely as your risk cover. Should something happen to you, that's the money that will be available for you to either use at that point or for your family. Mutual funds, yes, that would be considered an investment, and in that space, I think you have diversified into just too many schemes.
So
just to start, so that I can see the performance, and later on I can modify with the shorter number of portfolio schemes.
I take your point, Karan, but this is just an unwieldy portfolio, right? So you will have to sort of tighten it a little bit, more than a little bit, to sort of make it worth your while to, track it and therefore, carry on with the schemes that are working.
Yeah, okay.
No, so we agree there on a couple of points. First is the number of schemes has to come down. You have a sector scheme there. Sectors are notoriously hard to predict. Even sector analysts get it wrong all the time. So unless you have some insight into a sector, or you are doing a lot of research, we usually advise people to not invest in sector funds. Sector risk is also very concentrated. You have some pure value exposure, you have a long-term equity fund, small cap funds, and a focused funds. So even though they are in different subcategories, it's just that they could still have quite a bit of overlap. So it would help if you could reduce it down to 5 funds. You have a very long investing life ahead of you, right? So if your portfolio has 10 funds today, there's a high likelihood, in 5 years it'll have 15 or 16 funds. More than anything else, what bogs down people the most is they have too many funds and they can't figure out which one to keep and which one to let to continue.
Yeah.
And consolidation is hard, so never get to that point. The best advice is stick to 5 funds, and if you want to add a fund, then make sure that you're taking a fund out.
Yeah, I'd agree.
Okay. And on this insurance policy, having a term insurance, should I stop investing in LIC?
Yeah, I mean, I think our advice would be the same here. Do a pure term cover. Keep your insurance totally separate from your investments. You can invest in LIC mutual funds if you want to, but don't do ULIPs.
Okay, Karan, I hope that works for you. Gaurav, thanks very much for joining in and for answering so many queries that have come up.
Thank you, Sumaira.